Hi everyone! This video will be about financial model of an agricultural farm. If it's useful, please give us a like, subscribe our channel, push the bell button and leave us a comment. Also, you can order financial business models from scratch or download this model. The link to download is below this video. If you have a business idea of starting your own farm, this simple financial model can help you to evaluate the amount of money you need to start this business. Besides, you will also be able to see the profit, payback period of your investment and profitability of your future operational activity. Of course, it will be very interesting for you to know how stable your business idea is if something happens with revenue, expenses, and so on. So now let's go through the model and I will show you what items you should pay attention to if you want to run this business. In our model, all inputs are colored in blue. Other cells are automatic. First of all, we enter the year when all our financial projections start. We are starting with formulating the basic parameters of our farm. First of all, we set the first month of agricultural cycle. For example, April, a month when we put seeds in soil. Then we enter the percentage of losses during harvesting and storage. Then we specify the cultivation area for each year of financial projections. Now we are moving to the soil inputs and consumption of direct costs. During our agricultural cycle, we put seeds, water, fertilizers, herbicides, and so on in soil. Also, our agricultural machines consume fuel. In the following table, we have got a list of components which are consumed during agricultural cycle. The first column is a name of component. The next column is a price per 1 unit of this component in its metric. Then we specify how often we buy it. 1. We buy it every month. 2. We buy it once in 2 months. 6. We buy it once in 6 months. 12. We buy it once a year. You can enter the number from 1 to 12. The next column describes the displacement of purchase of this component. 0 means that there is no displacement. 1 means that if we need it today, we had to purchase this component 1 month beforehand. 3 means that if we need it today, we had to purchase it 3 months ago. So, here, in this block of inputs, we can enter from 0 to 6. Then, we set up the productivity of our agriculture in tons of harvest per acre or hectare during the agricultural cycle. The next step is when we specify the natural amount of components that are being consumed during the agricultural cycle. Be careful! We must enter the data in natural metric we buy it. Then we move to the piecework payroll. From top to the bottom, we have a list of works which must be done during agricultural cycle. In this area, we put the price of piecework per 1 hectare or an acre. Then we can divide our harvest into several grades. Here we specify the percentage of a harvest for each grade. Each harvest grade can have its own price dynamic and speed of sales dynamic during agricultural cycle. In the next table, we specify selling price dynamic for each harvest grade. Then, we move to enter percentage of harvest of each grade sold each month during agricultural cycle. So, in the end of agricultural cycle, we must get a total of 100% of harvest sold. We also have some control cells which will show you a mistake if you put in the wrong amount of data. The next block of inputs deals with investment needed before we start operational activity stage. Green column will show us the moment when we start operating activity. Moving to the past from the moment of starting the operating activity, we describe our investment stage. Here, we can specify what item we invest in, when we invest, and how much we invest. Then we have a payroll table where we mention salaries, positions, and seasonality of amount of people on each position. Our agricultural farm may also have some fixed costs, which can be specified here. We've marked a typical year where you can put your fixed costs even if they have some seasonal fluctuations. Going ahead, we also have a depreciation table. If we have a depreciation for the investment item, we can set the depreciation status and specify the period of depreciation in months. The next block of inputs deals with taxes. You can set the tax rates and move to the cash flow statement, where you will see the results of financial modeling. Cash flow is the main statement where you see financial efficiency of your business idea. What valuable information can you get from this table? First, you can see the total revenue, direct and fixed costs, payroll, and taxes. Second, you can see your monthly profit and cumulative cash balance. Third, one of the main things you'll see from cash flow is total amount of money you need to start the business. If you see that total financing is bigger than the amount of money you have, you can add loan parameters. Amount of loan, month and year you get it, loan term and months, interest rate, and grace period for interest and body payment of the loan. After cash flow statement, we can see lines with profit and profitability. Then you can set a discount rate and look at the final financial efficiency parameters of your agricultural business. Now we can see the graphic illustration of your business idea. Here, we see in monthly detail simple and discounted payback period, loan coverage ratio, revenue and total expenses, profit, profitability, cash balance, cumulative profit, operation profit, and loan payment. Then, we have the same information done yearly. On the next Excel sheet, we have gathered yearly consolidated cash flow statement, profit loss statement, and main financial results of your agricultural farm. Finally, we see the financial efficiency of your agricultural farm. Is this model stable? What will happen to your business if revenue decreases or expenses rise? Now it's time to apply sensitivity analysis. Further, we have several Excel sheets where we test financial efficiency. We test the influence of such parameters as revenue, fixed and direct costs, payroll, investment, interest rate, and loan amount. How does it work? For example, let's go to the revenue sensitivity test. Here, we set the pace of increasing or decreasing the revenue. Then, we push the sense button and see when our financial efficiency will go negative. Now we see how stable our agricultural farm business model is. Plus, it's a great moment to rethink your business strategy in time before you start investment your money in business. Maybe it's a good time to return back to inputs and create new scenario which is more financially strong. The same story goes with all other blocks of sensitivity analysis. So, this was agricultural farm business model. You can download it. The link to download is below this video. If this video was useful to you, please give us a like, share it with your friends, subscribe our channel, push the bell button or leave us a comment. Also, you can ask us to prepare an individual financial model. Let's test your business idea. Stay tuned and bye-bye!